Uh, Actually, it's not just three avatars. The more important avatar is the podium here, the moderator. You need a moderator for every debate. And given I'm making a fair assumption, the House is full of people with a bias towards technical analysis. So even the process of vote needs to be done responsibly. Why such a topic to present? Let me explain that quickly. For many years, I've wanted to engage non-technical analysts, whether practicing fundamentals or any other form of analysis, to sort of formally come and engage with us on a debate on this. To keep dismissing or disliking each other or to, appreciating each other partially is not leaving enough. But somehow, all invitations for such an open debate have been so far declined. Maybe, some people don't find worth it. I'll try to do justice to all three, given the fact that all of us have a certain bias. Let's all be judicious, and if the unbiasedness is not eliminated out, such a debate will remain always open and will need to be done again with more proper participants. Straight jump off and start off, before yes, a motion such as technical analysis is a hoax. With the permission of the House, I might, as the moderator of this debate, like to refine. Motion for a debate usually can't be a negative topic. It has to be an assertive topic, and in that sense, and the challenge again is this House is full of technical analysts. So the majority should not move a motion in a debate. So I'll take the assistance of the House. We can change the topic to technical analysis works, and that motion will be led by the technical analyst. Or we can keep it the way it is, that technical analysis is a hoax. What does the House prefer to be the motion? Louder. You said hoax or works? Louder. Sorry, both sound similar. H or W? Okay, everybody's charged with aggression. So I'll straight start off with a negative motion. Somebody has been careful to write Sushil Kedia on all three podiums on this side as well. I know who it is. Now, it would have been easier for me to remember that this is the fundamental analyst here. As a fundamental analyst, I proposition to this House that the hoax of technical analysis needs to be exposed and right away, today, here. Why I say it's a hoax? There are certain simplistic assumptions on which people have been claiming their ability to forecast markets. With endless number of stop losses, endless number of revisions, endless esoteric ideas for which there is no realistic rationale available. Why should I believe that Fibonacci analysis has any merit? Why should I believe your waves count anything? Why should I believe your candles and the colorful terms you use have any sense? You need to. If there is a valid school of knowledge, it must be consistent and explainable. You should be able to explain why your methods work. Without being able to answer the whys, there's no difference between the practitioner of a belief system called religion and the practitioner of what you claim to be a scientific method of analyzing markets. In our kind of work, we are all the time focused on the basis of why we are saying something. In your methods as technical analysts, that basis is missing. You people seem to be knowing the price of everything, but the value of nothing. And without values, and without having an understanding of how those values are arrived at, if you are indeed a professional analyst, and without any focus on values, what kind of service are you going to be able to provide to your clients? Given this debate is actually not two-pronged, but three-pronged, and perhaps it makes it a little more complex. Before the motion is entirely placed by two different schools of thought, maybe I thought I'll barge in as a technical analyst and keep rebutting points to point. But maybe the round of rebuttals will be later. For now, I'll present my basic thesis. The contention that we do not have a basis for what we say is complete imagination of those who have not had the chance or the willingness to study what we do. Had you done that, then you would have asked us, or you would have read it, that any kind of model that you may build with all the knowledge that you may have, It's so difficult to enlist each and every variable possible that affects stock prices in the first place. And then to have realistically accurate estimates of those variables with every change in the marketplace. Two-pronged challenge you fundamental analysts face. I'm not decrying you. I'm not calling fundamental analysis a hoax. No, I'll not get to that level of aggression. But yes, you guys indeed have a far larger challenge, and because of which we evolved and came into the marketplace. All the participants are making any mistakes. Rather, let me add one more point. Those who are actively participating in the markets are not the only people affecting prices. Those who are not yet participating in the price discovery process are also a future demand and supply. So level of participation as well as level of non-participation both create prices. So what if the world at large is never at consensus for the only god of markets is change, and in a world that is only going to keep changing, if we incorporate the collective wisdom of all into prices and study in our simpler methods, then how are we suffering from a lack of any basis? As a quant analyst, my contention with technical analysis is that there are so many beliefs, there are so many religions you people practice. Have you really tested them? Have you seen how they have worked in the past? Have you applied the rigor of statistics? Have you applied the rigor of mathematics to figure out how true your beliefs are? The rigor of mathematics. With utmost humility, I'd like to mention, mathematics is also something which is a creation of man. Mathematics is a way in which mankind perceives things. To run something through known mathematical sieves is not the final answer of the puzzle called future. How much of this universe is known to us? In terms of specifics, the quants have defined risk as standard deviation. What is standard deviation in common sense terms? It is a square root of a sum of squares. The human brain is not wired to understand any mathematical entity as a square root of a sum of squares. So how is it that you guys are more scientific? It is a commonly held belief amongst the community called quant analysts that the square root of a sum of squares represents risk. If everybody agrees to call a chair a table, and in this room, if each person is sitting actually on a table by this language, then you guys are happy within your own consistently defined universe. This does not provide me with a comparison, and yet I'll have to lean on it to compare with other methods of analysis. For a moment, be happy assuming that technical analysis suffers from these lacunae. Tell me any other method in which such kind of sufferings and such kind of challenges are not there. In fact, we would argue these same lacunae are substantially lower in our methods. The fact that these stop losses are irritating you is also a corroboration of what I said earlier, that fundamental analysis is a way of life in which you live in ivory towers of arrogance. You compute what according to you is the value of a security, and then you compare it with the market price, and then you come and say, market is wrong. My sense of value is this security is deeply